Happy Monday morning to you folks. This is Lee Goss coming at you again from the offices of EFG Group and International Futures Group here in Chicago. Want to talk today about some commodities and directions that might be of interest to you. Looking first of all at the E-mini S&P market. That catches my eye because A, it is in an uptrend according to my model, the LAWG 647 model. The March E-mini S&P is in an uptrend, as I said. It is also in red alert status. Now what that means is certain things have come together in the model that suggest that we're going to have both a chance or greater chance for increased volatility in the E-mini S&P and a greater opportunity or greater probability for greater than a normal weekly range. So keep your eye on the E-mini S&P. Also is the cotton market. The cotton market is in an uptrend, and like the E-mini S&P, it is in red alert status, and like the E-mini S&P, this suggests that we could see an increase in volatility and a greater than normal trading range during the week. The E-mini the March cotton will turn bearish this Friday if it can close at or below 60.23. That's a close at or below 60.23 on the March cotton will turn it bearish. Going back to the E-mini S&P for a minute, I forgot to tell you that the E-mini S&P, the March E-mini S&P will turn negative on a close at or below 20.2675. Moving over to interest rates for a second, the 10-year note is in an uptrend. Like the E-mini and the cotton, it is in red alert status. It will take a close at or below 125.05 on Friday to turn it bearish. We are going to be looking for increased volatility and a probable greater than normal movement in the weekly range in the 10-year. Now last week I talked a little bit about the cattle hog spread, and as the week moved into Wednesday I was even pretty giddy about it, couldn't wait to get that done. Almost positive that we were going to see a reversal in that spread, but alas, what happens is that between Wednesday and Friday the cattle turns around and gains probably over $7 on that spread. Cattle continues to be the dominant part of that spread, long cattle, short hogs. It takes a close of 70 at or below 77.27 this Friday to reverse the trend. Probable, yes, even possible. But as we take a look at it, again, I'm going to need confirmation before I do anything. That spread is just that volatile as we saw last week. Commodity to keep your eye on, May soybeans. May soybeans are in a downtrend and have been in a downtrend. It will take a close at or above 10.54 this Friday. That's a close at or above 10.54 this Friday for May soybeans to turn bullish. They closed last week right around the mid 1030 level. It's the 1054 level is about 22.25 cents higher than last Friday's close, and that is virtually nothing, as we know, in the soybean market. And I am looking for increased volatility also in the soybean market. Just a couple of things to keep your eyes on. Again, we give you this information in hopes that you'll consider doing some business with us. You can reach us at 1-877-304-1369. That's 1-877-304-1369. If there are any commodities that you're interested in, like to get our insight on or find out what the model is saying, feel free to give us a call. I'd love to talk to you. And have a great week. Keep in mind that trading commodities, options on commodities, and spreads is a risky endeavor. Understand the underlying risk that you're going to assume if engaged in commodity trading. Again, have a great one. This has been Lee Goss at the offices of EFG and IFG in Chicago.